I just want to get the market reaction to those H&M figures that have just come out. Not bad, actually. Louise Cooper, market analyst, of course, at BGC International. A very good morning to you. Louise, just what do you make of these?
Well, I think the good news is on the gross margin. We heard from Hennes only a couple of weeks ago about sales growth, and that was better than analysts had expected, and that led to a bit of a pop in the share price, about 6% up on the 15th of September. But the fear was always that Hennes had taken this very competitive, aggressive stance. They weren't going to pass on cotton price increases to customers. So the fear always that would hit gross margins. Well, actually, gross margins at 58.6% are better than the market had expected at 57.8%. So that is a good thing, especially as now cotton price is now weaker, and we are expecting the pressure on cost increases to actually alleviate over the next couple of years. The other thing on these 265 new stores they want to open, that's, given the fragility of consumer confidence, that's a big sign of confidence from H&M, that they think, although consumers are having a tough time, their position is strong enough to continue to expand pretty aggressively. And I guess, when you look at H&M, it's been a fabulous stock, a fabulous story. Those who got in at the beginning have made an awful lot of money, and that probably explains why it's on a 20-21 times PE, because frankly, in this environment, to be doing this well is impressive. And
given the retail problems that there are out there, it certainly seems, Louise, that cheap is the way forward.
Well, apparently, Owen, I don't know if you know, but this autumn, it's all about warm tones, updated classics and exquisite details. And if you want to know, H&M have got a Versace collection, which I'm sure you and I will be all over.
Oh, yes, indeed. Let me just get you one more thought about the general market, because we want to talk about what's happening in Germany today. What do you sense the markets are actually doing at the moment? Are they giving the politicians, the policymakers, the time they said they need? Because it's a luxury time, isn't it, in these dangerous times?
It is, and I was talking to someone yesterday who said to me that European politicians work on their own sort of definition of time. You have market time, you have ordinary people's time, and then you have European political time, which is an awful lot slower than the rest of us. So I think it's not that we're giving them time. I just think everybody's so exhausted by the wild fluctuations, and there's nobody really pushing. There's no big hedge funds or big proprietary desks pushing the markets hard, because it's just so volatile, it's so terrifying, it's so difficult to trade, that I think we're almost giving them time, because the option is pretty scary.
We are out of time. Louise Cooper, always a pleasure. Thanks.